EazyBot family, Charles Anderson here, Business Intelligence Officer with EazyBot. So today we get to talk about what's been recently happening with the market. And you guys understand that EazyBot operates from a premise of being able to sustain market drops and still be able to produce profit. That's one of our claims to fame, right? And so we understand that when the market drops, many people pull out of the market because they panic and there is loss of profit when the market drops. But with EazyBot, we're not worried about those kinds of things. We can sustain high market drops and still produce profit for our user base. So let's dive into what actually happened recently. As of October 10th, there was a big market crash, and many a subscriber in the EazyBot community made profit. And those that did not have active bots missed out, right? But think about the people that did not have access to EazyBot. So we understand this was this was the largest market drop in a single day for the cryptocurrency space in general. And so billions of dollars lost on leveraging, right? And those that were spot trading, there were still losses. But with EazyBot, with the algorithmic intelligence that we deploy, our users were in profit. We'll see that a little later on. But the point here is it was a big day for crypto, right? And there was a lot of fear and uncertainty and doubt in the market. But the EazyBot ecosystem, the global user base that we have, we were thriving. We were excited. We were happy about what was transpiring in the space. And take a look at this. $1.65 trillion just gone from the market as stocks drop due to the global climate that we're undergoing right now. Thank goodness for a tool like EazyBot, right? Thank goodness for a tool like EazyBot. But let's take a look at what was happening with our corporate portfolio. You guys are very familiar with this. This was the one that was released January 2025 of this year, January 1st, and we had 32 assets deployed. And so let's dive into this. We're gonna go through a quick story. So 32 assets deployed, $1,000 equivalent trading capital in the form of a stable coin per each asset. So a total of about 32,000 deployed for this portfolio. The portfolio started on the 1st of January 2025. It's been running for 285 days. The report date is 10/13, about 4:21 p.m. Dubai time. So good 285 days running on the exchange Coinbase. Coinbase is charging 0.16% as far as its trade fees goes for buy and sell orders. And for EazyBot, this is a VIP plus subscription. So the charge here for the EazyBot product is 0.2% on sell orders only. All right. And so for the net profit, this bot produced over a period of time, so January 1st until 10/13, October 13th, 16.89% net profit. That's without exchange fees and without software service fees included, right? And so the projection across a 365-day time frame is about 21.63%. It's pretty phenomenal, especially considering all the market drops and the sideways markets and the bearish markets that we've had since inception of this portfolio. So generated about 8,000 in profit, paid about 900 or so in software service fees, 1,700 or so in exchange fees, a net profit of about $5.4 thousand. So pretty good profit factor, right? We understand that the average we should be looking for per portfolio is about 5, right? Profit factor of 5 or greater is great. It looks good. So let's project this over 1,000 days. We project this over, well, actually almost 1,400 days. So 1,365, 1,365 days. So 1,000 days plus a year. We're looking at expected profit of about $26,000 if things continue as is. And consider that we may be expecting additional volatility in the markets. So EazyBot may capture even more profit. We should see this net gain always increasing. Let's take a look at what the visual looks like for this portfolio, where you have a display of each trading pair and its net gain over a period of time. So the top net gain comes from Monero. Now, recall in previous visuals of this portfolio, Cake and CRV and Algo and Solana, those assets were top producing assets, the highest producing as far as net profit. Right now, Monero is at the top. Then you got Cake coming in second, Curve coming in third, Algo in fourth, and Bitcoin Cash in fifth. Now, all of these top producing assets where you see a range of net profit starting at about 15%. Let's go a little further. Starting at about 14.5% and above, these assets, all of them, they're producing better than the traditional finance market in the United States, S&P 500. Okay. And the average on this portfolio is 16.89%, which again is better than the traditional finance model S&P 500. That indice right now is at 14.3% for the year. And the year is almost over. Now, a few weeks ago, this was about 15.75% return on investment, with a dividend yield out of that 15.75% at about 1 to 2%, right? And so with this market crash, it looks like S&P 500 is down over 9%. Think about that in terms of retirement savings and your planning for the future. What if you wanted to retire at this juncture in the year and now your portfolio's down 9%? That's an icky feeling, right? So with the EazyBot model, you're not going back in profit. You're always producing net gain over time, right? It's always producing net gain over time. So week after week, we see this net gain. We see this percentage always increasing week over week. And that's what EazyBot does. It captures volatility in the market and turns that volatility into profit for us. Let's take a different look at the corporate portfolio. And so we'll go week by week with the corporate portfolio. When we started, we took a data point at January 4th. And so the profit net gain at that time, the average net gain was about 1.15%. Now we've gone a good 42 weeks, I believe, 42 weeks. And across that 42-week time frame, we've gotten from 1.15% to 16.89% across 32 trading pairs, several of which are actually below S&P 500. So if you had focused on these top 10 plus assets, consider what your portfolio might look like right now, right? It could be in the 30, 40% range, right? So really good performance coming out of our trading pairs, but more importantly, coming out of the algorithm that is EazyBot. Our algorithm allows a user to capture profit even when the market drops. And that's what we're seeing. Let's take a deeper dive into what happened in that market recently. So first, let's go through what this portfolio is actually doing. And let's compare it to maybe hodling, like holding on for dear life, as opposed to trading via the EazyBot regime. Let's say you're a hodler and you like to buy an asset and hold on to it in the hopes of selling it for a higher price than what you purchased it for. Let's take a look at that. So what we're looking at with this model here, this focuses on starting price of our 32 assets versus when the asset made profit on a particular or during a particular time frame. So starting price of an asset or a trading pair versus what net profit was made for that particular asset during a particular time frame. So again, starting capital per asset, 1,000, so total of 32. Now, we started when EazyBot was launched with these 32 assets, when the portfolio began, a certain amount of that 32,000 was used to enter the market. The total amount that was used to enter the market was about $2,030. So we entered the market with this January 2025 portfolio with about $2,030. And we let it run over 285 days. So starting price for a few assets like Aave, it started at $310. And the highest price that it reached during this time frame was $375. But the lowest price that it reached was $114.83. That's called a market drop, guys. And so guess what? The change in price from the starting price to the lowest price, that 310 to the 114, it's $195 down, right? That's crazy. It's crazy. Also consider the percent drop that you're looking at. And that's a more effective measure of what we're dealing with. So the market drop here is almost 63%. Now think about this. You got an asset, and let's say you were holding on to it, trying to time the market to get this highest price. More than likely, especially if you're not diligent, paying attention, always involved, you're going to miss this high price. You're not going to catch it. As a human being, we got things to do, right? We got to sleep. We got to eat. We got emotional maturity and intelligence that we got to care for. We have work and family and friends and social life and all kinds of things that can get in the way. If you're not a professional day trader, you may miss this high if you're doing hodling. But the low, you're definitely going to catch the low, right? Your assets are going to drop if you haven't sold it. And if someone had this scenario where they started at 310 and they caught the low, they're down 63%. They're panicking. They're ready to leave the market. Now with EazyBot though, so with EazyBot, even with this scenario between January 1st and October 13th, the net profit on this particular trading pair, Aave, almost $190 made, even with the 63% market drop. So net gain, 18.94%. So think about this. Market dropped 63% during this time frame, from starting price to lowest price, and we still made 18.94% on this trading pair. Just one of the trading pairs. So market drops, EazyBot still produces. But if you're hodling, if you're holding on for dear life, when you entered the market with this asset, you spent about $70 to enter the market. That's your starting position at a particular starting price. And so the quantity of Aave that you use for this $70 was about 0.23 Aave tokens, right? Now, if you were to catch that high price, if you were to time the market perfectly and you were able to sell at this high price that Aave reached during this time frame, your profit on this amount of asset that you were hodling, you make $14.67. That's a 1.47% gain. Woohoo! Really? 1.5%? What did EazyBot do during this time frame? 18.94%. Which one would you prefer? What would be a better scenario for your rate of return? So what you're seeing in this column, for all the trading pairs, hodling versus using EazyBot, EazyBot outperforms. The yes means EazyBot outperforms. It did better as far as the return compared to hodling and selling that initial price, that initial amount that you entered the market with. Okay, so really good story coming out of the EazyBot ecosystem here, where even compared to hodling, we're doing better, right? We're doing better. Even compared to S&P 500, we're doing better. So for this portfolio, related to starting price versus the highest price that was reached, average net gain, 16.89% across the 285 days. The lowest drop on average, like 50%. On average, the market is dropping 50% during this time frame. Isn't that something? Even with the 50% drop on average, we're still making almost 17% profit over this 285 days. Phenomenal performance coming out of EazyBot. So here are three scenarios. If you were to go all in, so let's say the 32,000, you entered the market with all 32,000. You didn't take 7% of the 32,000 to enter the market, just like EazyBot does with the SBS portfolio or strategy. You entered the market with all 32,000. You just put it all in the market. If you were to time the market perfectly to get a sell order at the highest price possible for all the assets, you'd have made a good $13,000, really 12,300. But that's like gambling. Who knows when that high price would be for any of those assets, right? It's like gambling. Let's say you were just to hodl, right, with that starting amount, and you time the market to get to the high price or to sell at the high price. You made a good, made a good almost $800. Now, using EazyBot, right, you didn't have to do any work, didn't have to worry about timing the market, didn't have to be in front of your computer looking at indicators or signals or doing technical analysis, any of that day trading stuff. Just turn the bot on, let it work, active bots. You made 5,400. Even when the market dropped on average 50%, you made 5,400, right? So that's the power of EazyBot, allowing you to capture market volatility and maintain a profitable status for your portfolio. Let's take a different look at it. What you're looking at now is, instead of comparing to the starting price, let's compare to the highest price that was reached. And so for this particular portfolio, highest price to lowest price, the average drop was almost 65%, right? 65%. The largest drop that we see here is coming out of which asset? We got 75% on the Shiba Inu asset, it looks like, or I'm sorry, Sand. A 75% drop during this time frame. Still produce profit, still produce 13. Let's pull this up. Oh, look, there's something even better here, but 75% drop for the Shiba Inu asset and still produced 13.74%. And remember, the starting position was just $70. So this entire portfolio is not blown, and we're not risking all the assets. We're making slow gains over a period of time, which accumulate to decent profit, a decent return on investment, especially compared to hodling or S&P 500 rates of return. So the average portfolio gain, better than S&P 500, which is 14.3% right now. It's better than hodling. What's the average gain on the hodl? 2.69% if you were to hold on to those starting positions and time the market perfectly and sell at the highest price. Crazy. There's no way you should be doing those kinds of things. Just use EazyBot. You're in a much better predicament when you make use of algorithmic, automated crypto trading furnished by EazyBot. So much better. So much better. Now, let's take a very specific look. During that time frame, January 1st to October 13th, there was significant volatility to produce profit for our global user base. Now, even more poignant, there was a big market crash, like the biggest for the crypto industry on October 10th. And this is what happened on October 10th. Let's take a look. Specifically for our portfolio, starting price of assets on that day, highest price of assets on that day, lowest price of assets on that day, and then the price change from highest point to lowest point. So this is the column that you want to focus on, column F and column G. What happened? Prices dropped, right? There were big price drops, Bitcoin being the highest, almost $18,000 drop from high to low. And so we saw a 14.63% drop. So that was the largest amount of money dropped, but the largest price fluctuation, the largest market drop in terms of percentage, happened with the Caspa asset. 81% down from high price to low price. Such a big market drop, but profit was made. Profit was made. So looking over this day, highest price to lowest price on this day, October 10th, let's do the analysis. The average price drop for the EazyBot portfolio on this day ended up being almost 50%, with the largest price drop coming from the Caspa trading pair, 81%. Now, the portfolio itself, what happened during this day? Well, the portfolio made almost $22, right? Market dropped 48%. EazyBot produced $21 on the day. The average gain across the assets was 1.48%. So market's down almost 50%. We're producing 1.5%. That's a no-brainer, right? Highest profits percentage came from the Litecoin trading pair, 19.37% profit percentage. Lowest came from Cake, 0.1% on that day. Now, keep in mind, there were tons of sell orders. So Cake didn't just have one sell order, it had multiple sell orders. It just happened to have the lowest profit percentage on a particular sell order. But there are over 280, well, there were actually 280 sell orders from this portfolio on October 10th. So think about that. The market drops and the EazyBot product is still selling for profit during a market drop. Okay. So this was during that 41st week of our portfolio analysis. So really great performance, even on a horrible day, right? People were panicking, the market crashed, lots of liquidation happening, fear, uncertainty, and doubt prevalent in the market. Just crazy day, right? Crazy day. Now, overall, if we were to look at the actual visual of what happened in the market that day, and I should say over a period of time, let's take a look at what happened over a period of time, including that 10/10 or October 10th market drop. So the market drops on average for our portfolio during this time frame, January 1st through October 13th, when we did the portfolio analysis, average drop over 50%, right? Over 50%. What did the portfolio do during that time frame where when we started versus where we ended on the 13th, the market's down 50%? Well, we know what it did. It produced 16.89%. So we've seen this type of visual before in one of our other portfolios. So this is a consistent theme with EazyBot. Our product produces even when the market does not. Our product produces even when the market does not. And so ultimately, what do you prefer? You prefer a rate of return that does not cease and always increases over time? Or do you want to try to time the market? Make it big. You could. It's your best bet. Just make use of the product. The premier product that produces profit even when the market's down over a period of time, using algorithmic crypto trading coming out of the EazyBot ecosystem. So, EazyBot family, we want to hear your market drop diary. We want to know, did you have active bots during the market crash, October 10th? And how did they perform for you? What was it like? How much trading capital did you have still in your bot? How much profit did you make? Was it a good day for active bots?